Hi, my name is Tebi. Today we are going to be talking about the differences and the similarities between federal government savings bond and treasury bills. Had over 20 years of experience in both investment banking and also financial services. And on this channel, we talk about personal finance, we talk about self-development, we talk about wealth creation and management, investing, and we also talk about retirement planning. If this resonates with what you like, please kindly click the subscribe button, watch our videos, like our channels, and click the notification bell. I really want to appreciate everyone that has returned all the time to listen to all the videos and to listen to watch us and to listen to our videos, to like us, to all the comments and all that. Father, we are very grateful. Thank you so much. Thank you very much. So now we go into the video of the day. What are the similarities between federal government bonds and treasury bills? Now, the similarities are that one, they are both government securities. They are both government debt securities in which the government issues out at certain intervals for the public to be able to invest in, and the government uses these funds to do one or two things in the public affairs. So, and they are also, secondly, is that they are both fixed income, low risk investment, meaning that they give you fixed income, like the income is actually, the return on investment has actually been ascertained or determined even prior to the investment. So they are fixed income. Like you can say, okay, like my 10 million naira in treasury bill or my 20 million naira in treasury bill, that this is the amount it wants to be yielding for me. Like, okay, probably my rent per year is 1 million naira. That okay, how much of my investment in bonds can actually give me 1 million naira? And you put the money there. So it will be yielding you your rent per time and all that. So that's what we call fixed income. We already know how much is coming in. It's not like speculative or anything. It's fixed and all that. So what are the minimum balances on this federal government savings bond? The minimum balance on the federal government savings bond is 5,000 naira. And mind you, the federal government bond usually comes in twofold. We have the one for the primary market, we have the one for the secondary market. So now we have the one that has minimum of 5,000 naira, in which we are going to be talking about. That's the federal government savings bond. And we also have the federal government bond that is 20 million naira. That if you don't have 20 million, this 20 million is the minimum you can invest in it. But this particular one is for the low end income earners, that the federal government wants them also to be able to cultivate the habit of saving and investing so that they will not be on the loser. So if you don't have 20 million naira, that doesn't mean you cannot do a bond. So minimum investment in the federal government savings bond is 5,000 naira, and the minimum in treasury bill, before you can invest in treasury bill, the minimum is 100,000 naira, and then the maximum in the federal government savings bond is 50 million naira, and in treasury bill there's no maximum in it. What is the duration? The duration for the federal government savings bond is within 2 to 3 years. You can do the bond of 2 years, you can do the one of 3 years. And the federal government bond has maybe duration of like 20 years and all that. But the federal government savings bond, which we are discussing in this video, has duration between 2 years and 3 years. And some have 7 years, some have 5 years, like the Sukuk bond that just ended had 7 years. So for the treasury bill, the duration is usually within a year. And within that year, you have treasury bills of like 90 days, 91 days. You have treasury bill of like 180 days, 181 days, or 182 days. And we also have treasury bills of like 360 days, 365 days, 364 days, depending. Those are just those. Or sometimes we also have treasury bills that are like maybe 270 days, but it's usually within a year. So how often do we assess this investment? How often do we assess this investment? Federal government savings bond is usually assessed every first week of the month, like every first week of every new month. The federal government comes out, debt security office comes out and issue this instrument and all that. For the treasury bills, is accessible almost every time, almost every month, as long as the auction is out and all that. It's accessible almost every month. For the treasury bill, the instruments are usually discounted. Like if you are buying treasury bill of probably 17% on 1 million, the investment, when it's discounted, and your interest is going to be paid upfront. Your interest is paid upfront, like on that 17% of that 17% per annum. The interest is going to be paid to you upfront, and at the end of the tenure for that treasury bill, your capital is going to be returned to you back. But you would have gotten your interest even at the beginning of the investment. But for federal government bonds, the interests are usually, it's not discounted, but the interest, which you normally call the coupons, are usually paid to you every quarter. So for a 10 million naira bond that is on 20%, you'll probably be getting 500,000 every quarter till the expiration of the investment. And at the end of the day, at the end of the tenure, at the end of the duration of that investment, you get your capital alone back because you have been paid your interest over the years, and you get your capital back. Same also for Treasury bill, you get your capital back because your interest has been paid upfront at the beginning of the investment. For the federal government bond, you usually don't terminate it. You can sell it back. You can sell it back. You can probably sell it back. If you have these bonds that are for years and all that, you can sell it back. But for treasury bills, you can actually terminate treasury bill at a penalty because you know that you have already earned your interest at the beginning of the investment. So if you are now terminating your treasury bill before the expiration of it, you are going to pay some penalty back on it. So that means your capital is going to be reduced by so amount, of which is not going to be complete. You're going to pay penalty for terminating it before the maturity. Federal government savings bonds. Federal government bonds, usually you can use them as collateral in financial institutions. They are used as cash collaterals in financial institutions. Treasury bills are not usually used as collaterals, but you can use federal government bonds as collateral. And how can you assess this investment? You can assess them through the asset management firms. We have some of them around, like Stanbic IBTC, FGN Quest, all these brokerage firms. All these, they are hubs. They have different apps, investment hubs that we have around now. Investing has been so much simplified, but you have to do your due diligence to know that this organization in which I'm investing in, to buy my bonds, to buy my treasury bills, to invest in my money market mutual funds, that they have actually they have been around over time, and they have been tested and trusted, so that your hard-earned money will not just go down the drain. And that's why I can mention FBN Quest. That's why I can mention IBTC. They are just as sure as okay. That's why I can also mention maybe ARM, can mention Mary's Term. All these organizations, they've been around for a very long time, but do your own due diligence and see the one that works for you. Now, for you to be able to now choose between maybe if it's a federal government bond that I want or is it treasury bill that I want, it now depends on maybe your financial goals, depends on your risk. They are both risk, they are both low risk fixed income investment. They are both fixed income investment that can generate to you a certain cash flow per time. So it all depends on, okay, probably you want to diversify your investment. You don't want to put everything in treasury bill. You don't want to put everything in bonds and all that. So it now depends on you or what you want. The percentage of low risk investment that you want in your portfolio, probably your age, probably your financial goals, to be able to determine what you want. These are the obvious similarities and differences between these two debt securities. Thank you very much for sticking around. See you in the next video.